General contractors, a packed schedule can look successful from the outside while money still feels tight behind the scenes. Crews are working, customers are calling, and new projects are filling the calendar. Yet payroll still creates pressure. Vendor bills keep coming, and the bank balance does not seem to match how busy everyone has been. More jobs don't always fix the problem. Sometimes the business already has plenty of work. Better financial information is what helps you understand why money is not staying in the company. A bank balance only shows how much cash is available today. It doesn't explain which projects made money, which customers still owe you, or where expenses have started climbing. 7 financial reports help answer those questions, and every general contractor should review them each month. Let's start with the profit and loss statement. A profit and loss statement shows how much money, how much revenue came into the company and how much went back out during a certain period. Many contractors look at the revenue first. A strong revenue number feels encouraging, especially after a busy month. Revenue only tells part of the story. You got labor, materials, equipment rentals, fuel, insurance, subcontractor payments, and overhead all come out of the money the business earned. A company may bring in a large amount of revenue and still keep very little profit. Looking at this report every month helps you see whether expenses are rising faster than income. You might notice material costs increasing, equipment expenses getting higher, or overhead growing more quickly than expected. Once you understand how the company performed overall, it's time to look at each project more closely. A job profitability report shows which project actually made money. Large contracts often look impressive, but a better contract does not always produce a bigger profit. Extra labor, delays, material increases, equipment rentals, and missed charge orders can quickly reduce what the business keeps. A smaller job may produce a better return because the project stayed on schedule, remained within budget, and required fewer unexpected expenses. Reviewing job profitability helps you see which types of work are worth pursuing. It also gives you better information when pricing future projects. Next, take a close look at the Accounts Receivable Aging Report. Accounts receivable is simply money customers still owe the business. A profitable company may still struggle with cash when invoices remain unpaid for weeks or months. Money sitting in an unpaid invoice cannot cover payroll, purchase materials, or pay suppliers. Reviewing this report helps you see which customers owe money and how long each payment has been outstanding. Late invoices become harder to collect as time passes. Following up early gives you better chance of receiving payment before the delay begins, affecting the rest of the business. Cash flow deserves its own report because profit and cash flow are different. Profits show whether the company earned more than it spent during a certain period. Cash flow shows when money actually entered and left the bank account. Timing matters in construction. Crews may need to be paid before a customer sends the final payment. Materials may need to be purchased before the next draw arrives. Equipment rentals may be due while invoices are still outstanding. A cash flow statement helps you see when money is expensed to come in and when major expenses are due. With this information, you can prepare for payroll, supplier payments, taxes, and slower periods without relying on the current bank balance alone. A balance sheet gives you a wider view of the company. Assets include items a business owns, such as cash, equipment, vehicles, and money owed by customers. Liabilities include loans, credit cards, unpaid bills, and taxes owed. Reviewing the balance sheet helps you see whether the company is becoming financially stronger over time. Debt may be increasing even while revenue looks healthy. Cash reserves may be shrinking. Customers may be taking longer to pay. Looking at the balance sheet each month helps you spot those changes before they become harder to manage. Payroll reports also deserve regular attention. Labor is one of the largest expenses for many construction businesses. Wages, overtime, payroll, taxes, and employee benefits can take a large portion of the revenue from each project. A few extra hours may not seem serious during one busy week. Across several crews and several projects, these hours add up quickly. Monthly payroll reviews help you compare labor costs with the amounts included in project estimates. You may find certain jobs consistently require more labor than expected, or overtime may be cutting deeper into profit than you realized. Work in progress reports are especially important when projects last several weeks or months. Waiting until a project ends to review its financial report leaves very little room to correct a problem. A work in progress report shows each active project how it's performing while work is still underway. It compares the amount billed, the amount collected, the cost already included, and the work remaining. Labor may be running higher than planned. Material costs may have increased. Billing may be falling behind the amount of work already completed. Finding those issues early gives you time to respond before the project ends and the profits is already gone. Each report gives you a different part of the financial picture. A profit and loss statement shows whether the company made money overall. Job profitability shows which projects produce the strongest returns. Accounts receivable shows who still owes money. Cash flow shows whether money will be available when bills are due. A balance sheet shows the financial strength of the company. Payroll reports show how labor is affecting profit. Work in progress reports show whether active projects are staying on track. Reviewing all 7 reports every month gives you better information when pricing jobs, planning for payroll, following up on invoices, and deciding which projects are worth accepting. I'm Kim Clenny, a licensed CPA in Montgomery, Alabama. Schedule a free 30-minute business tax and accounting review when you want help understanding what your numbers are saying about your business. We will review your bookkeeping, taxes, payroll, and financial records together. You will leave knowing what needs attention and what steps to take next. Appointments are limited each week, so book your review today. The link is in the description of this video.